Hello and welcome to Light Warrior Radio. I am very excited today because I have my friend Winnie Lau with me, and we met through our coach and, well, actually, Winnie's personal friend, who is my coach and
Both,
our coach,
both.
Tim Francis.
Yes.
Yes, Tim Francis. And, Winnie started talking about her business, as, part of our coaching, and I leaned in and I was like, what is that she's talking about? I've never heard of infinite banking. Like, that's very curious. And as let's just say, a health and freedom advocate and champion, I needed to know more. So I met with Winnie one-on-one, and she started telling me about what she does. And I was like, I've never heard of this. This is so fascinating. We have to get you on a radio show, right? To tell people more about it and the book and all this kind of stuff. So today we're going to talk about what's your plan B from the bank? Like, make the bank the plan B, right? Your plan A is something completely, it's not new, but it's new to me. And I've never heard anybody growing up talking about it. And it's something I want to look more into and do myself one step at a time, Karen, because you're always doing 1,000 things at once. It was super interesting. Um, Let me read you a little bit more about Winnie's background here. It's super neat. So Winnie Lau is Canada's first female authorized infinite banking practitioner through the Nelson Nash Institute and the co-visionary behind Ranch Your Way, a movement guiding ranchers and rural families to build generational wealth. She is the Canadian co-author of Farming Without the Bank, co-creator of Empower Your Children About Money, and the founder of the Cash Smart for Life program, which empowers parents to lead their children to financial success with confidence and clarity. In June of 2024, Winnie launched the Win I love that podcast, a bold Canadian platform focused on how we work with money, think about money, and use it to elevate our life experience. Rooted in the infinite banking concept, the show features three distinct series released one at a time. With over a decade of experience in life insurance, financial coaching, and legacy planning, Winnie helps conscious families and creators ditch the debt trap and align their finances with their deepest values. Welcome, Winnie.
Thank you. I'm honored that you invited me.
Well, we're honored that you are here. You're a wealth of knowledge, and this is so new to many of us. I think we're gonna need the beginner version here of
Okay.
this. So let's go back and think about. Okay, so Winnie, first of all, how did you get involved in all this money banking stuff, and how did you come to learn about this infinite banking system?
Well, if I really think back on what was the root cause that got me to the place that allowed me to hear this message, it was the one decision that I made um, about a year after my daughter was born. She was about a year old, and I was single. I was 10,000 in debt, and you know, um, just the hard crash of realizing, okay, like I'm not just looking after myself anymore. I'm also looking after a young person. And, I obviously don't know enough about money and how to manage it. So I want to have a better life. Like there's no reason for me not to thrive in Canada. Like my parents came from China, first generation here in Canada. So I mean, I had all the like there should be no reason. I'm not in a war-torn country. I should be able to thrive. So I made the decision I really want to learn how to thrive. And I think from that one decision that really attracted so many different it just allowed me to be open and hear many different opportunities. And so for of course it got me into personal development, went to a whole bunch of personal development seminars, and then I got into real estate investing. And then the crash, like I got into real estate investing, oh man, right, like just when it was super hot, here in Canada, like, and then the subprime market hit in 2008, 2009. And because I was a single family real estate investor, I just, when the market tanked, so did my portfolio, so did my reality of like what I thought I understood about creating wealth. And um, then I really started to understand like how much of us are like how deep my relationship was to the bank, because I had several different mortgages and places to own. Like I couldn't even sell my properties, even if I wanted to, because it was actually cheaper to subsidize my renters to stay in the properties than it was for me to actually sell and owe a whole bunch more to the bank, because my mortgages were the balance of it was more than what I could sell it for, right? So
Okay.
it was a
Wow.
tight, it was a really, oh, it was so, like, I would say it was very stressful, very, very stressful time for, like, myself and my partner at the time, and I'm sure for my daughter having to witness, like, such tension in the home, and, um, yeah, but that's when I started really waking up, like, what is the solution, right? And I'm a very solution-oriented person. I'm also a person that has a tremendous amount of faith, knowing that, "Hey, I know this isn't permanent, but I still
Mm.
gotta get through this moment. And so what can I do? What can I do? What is the solution?" And that's where uh, discovering what the infinite banking concept is, because when you're a real estate investor and you're knee deep in debt and you have other colleagues and friends that are kind of in it with you, you kind of realize that's out of survival. That's the first thing that you think about. How can I get rid of all this debt? Right. And so there was a program in the States actually, that it was like a financial technology program where it's like, if you enter in all of your debts, when the payments are due, all that sort of stuff, it looks like a dashboard on a car, and
Yeah.
it just like, it tells you, oh, if you pay your debt this day, it'll help you to pay this little amount of interest. Like it'll just tell you how to get out of debt the quickest, right?
Mm.
Mathematically speaking.
Right, right.
Um, and then I discovered that there was a different discussion called becoming your own banker. That was also sort of like a subsidiary offer on the side, but it wasn't really huge at the time, and it was called Banker's Table. Um, and we little did we know, it's like it wasn't offered in the state, like in Canada at the time. So we tried to figure out, oh, is this available in Canada? Like, can we actually do this concept of learning to how to own our own debt, right? It wasn't just a question of, how can we get rid of the debt? It's about, hey, while we live, we're always going to need money for the next thing. And
Mm.
sometimes the next thing that we need is more than what we have saved. And
Mhm.
so, how can we get into a position where we own all the debt, right? Because if we own the debt, then we're also in control, and we also get to recapture some of the interest that we would otherwise pay to somebody else,
Wow. Yeah, what a thought. What a
right?
thought. Well, and there and, with my, community, there are many people who are, really passionate about making a difference in the world as you are, and, when they're starting their businesses, especially, it just seems like there's this huge outlay of money and time, and they have more time than money, and it just seems like the society is rigged so much as we only know that there's just the bank. Like, that's all we know. Like, we have to borrow money off the bank or the credit cards or whatever. And what you're presenting is like seemingly an unknown alternative. I know it's not overnight, but at the same time, it's intriguing because wouldn't it be great if we didn't have to owe this other guy?
Wouldn't it?
Yeah. Yeah.
And there is that, there is definitely this possibility. And it's not like, the really fascinating thing about this is that there's really two parts to this, like the infinite banking concept. There's the mindset.
Mm.
Like the infinite banking concept is the mindset.
Mm.
Okay. It's the thinking, it's the process. The tool to exercise the mindset is the dividend paying whole life insurance contract, specially designed, okay? Because not all dividend paying whole life insurance contracts are created equally, right? And I mean, I can't speak to what it's like down in the States, but of course I do have, you know, um, trusted contacts down there. So, I mean, if you are interested, then more than happy to share who that contact is. Um, but yeah, there's really two parts. And so the mindset is one way, and then the actual contract itself is actually not new. It's very time tested. It actually came into place well before the banking industry got established under law, right? And so, um, the dividend paying whole life insurance contract, I can speak for Canada, which was like, in 1847 was the first dividend paying whole life insurance contract offering here in Canada, and they paid out their first dividend in 1848. So that's like 175 years old. So
Wow.
in the States, they're a little bit like even more established than here in Canada, right? So it's almost coming up to 2 centuries. Now just think on how much has happened over 2 centuries and how long this contract has stood for, and how long, like, and even though dividends are not guaranteed, they have successfully paid out a dividend each and every year throughout all the changing times, throughout those world wars, throughout the changing of transitions of currency. Like, we're going through another transition of currency, aren't we? Right?
Yes. Yes.
Mhm. Yeah.
Well, yeah, and something so old. One of the things that we'll get back to the whole life insurance thing in a sec, but one of the things that I've come to realize over the last few years, where a lot of so-called things we did not know that were hidden are being revealed, right? Which is good, but also fairly disturbing. Some of those things
Mm,
is that older things, in this case that I did not know about, like that was that old, if they still last, a lot of things in the past, the old stuff was actually good stuff,
yeah.
and has been perverted, inverted, changed, mutated, into something that does not serve us. And when I was talking to you one on one before, it just kind of blew my mind in terms of this is old. Like, just think of it this way, like, people were like, oh, I bought this piece of luggage 50 years ago and it's still good. Now I'll buy the same similar looking piece of luggage now, but at 90 days it's torn up and it's like ripped, and it's like, how
Mhm.
does it, like why is the older one better? And it almost seems very similar in this way.
Yeah, I know. We're just, humans we're funny. I don't know. I don't know what to tell you. We get easily influenced and distracted, right? This is where
Mm,
us being intentional about ourselves, like on a spiritual level, on a financial level, on a health level, all of it needs to come back down to, us being present with ourselves
mm,
and us taking accountability instead of abdicating, our wealth and our cash flow management, abdicating our health to somebody else, abdicating, like abdication is very expensive, right? And so
yes.
what
Big
I
quote.
love, yeah, it's super expensive,
Yeah.
and I can tell you how many, like, oh man, I lost so much money abdicating,
Mm,
and until it's just like one of those things, it's a constant reminder. It's like, yeah, if you sort of leave the responsibility to someone else, well, you're the one that's going to pay. Yeah.
yeah. Well, yeah, in this day and age, there's just so many things taking our attention. I know for me, health wise, I'm not abdicating, but there's other areas, financial being one of them, where I have, because I didn't have the knowledge, nor was I interested.
Mhm.
Like,
Right.
I was just started reading this book. One of my coach mentors had suggested I learn about living trust, and I'm like, why? Okay, so I'm like, okay. So I mean, within the first introduction, like the first, I think, chapter, I was like, oh my god, I'm never having a will again. You know what I mean? Like, it was just mind blowing because I had not taken the time to learn it because it wasn't interesting to me. I'm just
Hmm.
like, yeah, whatever the financial planner says, yeah, whatever, invest in whatever, yeah, that's fine, right? And it wasn't until like I needed money for something, and I thought, the only way I'm going to do this is if I liquidate my investments. I went to, the investor, and I said, what am I invested in? Right? And he's like, well, da 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 da, and I'm like, wait a second. I don't want to be invested in these pharmaceutical companies. I don't want to be invested in these oil companies, and definitely not big agriculture. This is not in alignment with my values. And he's like, Oh, well, I understand, but I've looked up the socially responsible mutual funds and they don't do very well and there's very few of them. And I was like, I'm cashing it all in for this other project that is like life affirming for me. I was shocked, and I think I shocked a whole bunch of people. I literally liquidated my whole life savings for, to make my book. I mean, it was crazy expensive, um,
Well, you
but
just
I
invested in you. You just
yeah,
invested in you instead,
exactly,
really.
exactly. I
Yeah.
didn't, I guess I could have gone to Hawaii or Fiji or something, but you know,
Yeah.
yeah, I don't regret it. I don't regret it, but I really did not know too much about this. So you said whole life insurance previously. I know that I've been indoctrinated to think
Yeah.
whole life insurance is not a good deal. You could save money instead of investing in whole life and be better off, but nobody ever seems to be able to do that. So, what's your take?
Well, financial philosophy. I'll start with that. Just like many different schools of thought when it comes to religion, there's many schools of thought when it comes to how we go about um, our financial strategy, right? So there is, the um Pamela Yellen and Dave Ramsey's, and they'll say buy term, invest the difference, and um, that is a strategy, and it is a way. I feel that that's the hope, pray, wish model. That is my thought and feeling about it. It's like I hope
Okay.
and I pray and I wish that my investments that I am going to have, it's going to be there for when I need it, when I decide to retire. And hopefully, during that time when I decide to retire, the markets are going to work in my favor so that I can live off the interest for my retirement, right? There is no control as it relates to how your investments will perform. There's
Right.
no contractual guarantees that that will
Mm,
happen, right? And so
mhm.
I believe buying term and investing the difference, that for me, I'm much too like I want more certainty, and there are certain financial tools out there that do provide contractual guarantees where the company is actually taking on more of the risk than the person themselves taking on the risk. And it
Okay.
is available. And that is what whole life provides. If you were to break down and just set aside the fact that it is an insurance contract, but if you were to take a look at the actual terms and conditions of a whole life dividend paying whole life insurance contract, a properly set up one for the purpose of infinite banking, okay? Um, Hands down, side by side, it's much better than, in my opinion. It provides a lot more control, it provides a lot more liquidity, um, and there's a lot more actual contractual guarantees if I was to add them up side by side. I wish I would have thought of that, and then I can give you guys a visual instead of just saying it, but I do have an actual visual for that.
Okay. Well, and
But
definitely you can find it, and if it's easy to find, and we can share it since we are on Zoom, and you can screen share if you'd like. It's very interesting to me that like you said, most people think, oh, if I do a balanced mutual fund, right? Not too risky, not too conservative. Maybe when I'm younger, I can be more risk taking, and when I'm older, more conservative, then I'm going to be able to live off, in my retirement. And my husband and I literally have a friend who said to us the other day, he has lost so much money in the last few months
mhm,
from his savings from these funds that
yeah.
he was planning to, go on a trip, take a vacation, and he canceled it because I can't afford to do that. It keeps
Mm.
going down. I don't know, and it's kind of scary because he's pretty conservative, right? It's not like he's, playing the stocks and things like that. And to be honest, I maybe I'm jaded right now, but I don't always trust Wall Street. So if there's another way, I'm definitely open to learning about.
Well, and just even take a look at what's happening now, even prior to like this weekend. What is going on? I mean, there's like the news that we get on social media, and then there's the news that is actually on the television. But it's kind of all saying the same thing, like the market's crashing, even like cryptocurrency is going down right now. And I mean, that's the nature. I mean, that isn't really actually like amazing news. It's just, it happens to be, it's reporting the status of what's going on in the moment. That's what happens. It's like severe downs, then ups, severe downs, and then ups. And it kind of climbs this way, right? But if you're a person that is like just in the middle of like making a life shift, and you really wanted to take time off, and
Yeah.
you're just getting it going, but maybe you're not like administratively a very strong person, so you haven't gotten all your ducks lined up, but you have the intention in your mind, and then all of a sudden you see on the news, oh my god, things just tanked, and my portfolio was like X amount, and now my portfolio is way down here. Yes, things shift really, really quickly, right? And
Mm.
that is, to me, when you adopt the financial philosophy that, no, I do not want to pay for a whole life insurance contract because it's been touted as too expensive,
Mhm,
right?
mhm,
And they'd rather have you shift all your discretionary income into investments instead,
mhm.
right? This is that is a definite consequence of what can happen, is that when you're ready to actually let go and go into retirement, that money may not be there for you at your desired time,
Oh, okay. Yeah,
right?
you talked about having more control, and so
Yes.
I know we do have some Canadians
Oh, we
on
do.
the yeah on the panel here. Leslie says
Good.
I love this topic. We're going to go to questions in a little bit, but maybe you can tell us like how does this actually work? What is this infinite banking concept? How does whole life give us money now? Because obviously we're not dying tomorrow. So how does that work?
Okay, well, so the dividend paying whole life insurance contract is actually, it gives us one of the benefits and features is that it actually lives up to the word life insurance. You can use it during your life. It actually, the words, the title of the financial product isn't lying to you, right? Term insurance should actually be renamed as death insurance, because then we actually can categorize it in our mind as, oh, that's the kind of insurance that is good for when I'm dead and my
Um,
beneficiaries get it, right? And it's
yeah.
similar. Paying whole life, your beneficiaries will still get a death benefit, but part of the features and benefits of a dividend paying whole life insurance contract is you can actually access the money that you're putting into it while you are alive,
Huh.
right? So I love it because part of the infinite banking concept, what I love about it is that it multiplies the use of the same dollar, right? If you have to plan anyways for end of life, like for advanced estate planning, if you're the type of person that wants to leave a legacy behind for your loved ones, right? Typically, most people think, oh, it's an expense. You got to spend extra money so that you can have that death benefit there for them. But you can also use it as a really great way to store your money and have your money working for you at the same time. It doesn't seem that way because you think, oh, it's an insurance contract, right?
Yeah.
But if you actually break down the mechanics of how the insurance contract works, you'll come to find um, it's brilliant. It's smart because the number one rule of the contract is that the cash value, which is money you have access to while you're alive, has to equal the same number as your death benefit by, well, in Canada by age 100. And I think in the States, don't quote me because I'm not US licensed. I think it's 121 in the States,
Hmm.
right? So by contract, if your death benefit by age 100 is estimated to be like $5 million, right? So every day, whether you are sick or not, whether you're working or not, or whatever, it's your cash value, money that you can access while you're alive, has to grow to chase that death benefit number all the way to age 121, right? So it's interesting. Sorry, I
Well,
get
but
excited
it
about
depends
it.
how
I
much you
don't know
put
if you're
into
following
it.
me.
Yeah, it depends how much you're putting into it, though, isn't it?
That's true. Yes.
Okay.
But so this is where I debate, like, it's too expensive compared to what? Like if you're putting money
Mm.
into it, but yet at the same time you can access it and you reuse it back in your life, then
Yeah, that's very different from a mutual fund, right? Where it's locked in and
yes.
you don't have control of what happens. And like,
Yeah.
Liz here is like, hey, they always tell us to do it for the long term.
Right.
Well, my friend is 68. What's long term? He's ready to retire. Now he can't.
Right. And never got to use his money while it was
Mm,
sitting there growing. Like that, most of the financial products are designed so that um it's designed so that your money and liquidity is locked up, right? And you can only grow your
yeah.
money as long as it stays inside that product.
You get
Whereas
a penalty when you take it out
mm, yeah. So
sometimes.
one thing I will mention here because it is relevant and I don't want it to come as a shock because I think this is why not everyone is doing it and this is why not every financial advisor is not necessarily sharing it because they can't wrap their mind around this particular point. So when you go to borrow, it's not withdraw, okay? When you let's just fast forward and let's just say everyone on the call got one of these. They got a dividend paying whole life insurance contract. They got one, okay?
Mhm,
And they go to, let's say, take out money for the first time,
mhm,
right? There's a little bit of different terms here because when we go to the bank, when we take money out, we call it a withdrawal. But
mhm.
in the world of infinite banking, it's actually called like a policy loan. You don't want to withdraw. You want to do it, you want to loan from yourself. You want to borrow from yourself.
Okay.
Okay. Because now you're the banker.
Oh,
Okay.
right.
And so when you borrow from yourself, that means you're now the lender because this is called becoming your own banker, right?
Hmm.
You now own the bank, you lend money to yourself, and then you pay
Hmm.
yourself back. Okay. So you're doing what the banks used to do. They used to lend you money, they used to charge you interest, and then you used to
Yeah.
pay them back,
Right.
right? So you have to shift it because we've never been given that position to own our own debt before. So
Oh,
when you
wow.
borrow money from yourself, you are paying yourself back and you are paying yourself back with interest.
Oh,
Okay.
paying yourself. Okay. Okay. Okay.
Okay. And and I will share this. And everything I just say, it's all like the tip of the iceberg. I'm sorry. This is all about like just creating interest. But when you borrow from yourself, yes, the life insurance company will charge you interest, just like the Bank of Canada or the Federal Reserve will have a flat rate, and then the bank turns around and adds a couple points of interest, right? And they make a spread on that interest, right?
Okay.
So um so this is where most people sort of go, what? So like how is this still good again if I have to like borrow for myself and the life insurance company charges me interest and like what is
Right.
this? Like is this all like, you know, like there's something wrong here. But what's very significantly different that a whole life insurance contract doesn't like has that no one else has is that the cash value still continues to grow as if you never took it out.
Ooh,
Okay, so
boom.
it's actually uninterrupted compound growth of your money. So like if you had a 401k, right? And if you had like 100,000 of 401k and you took out 30,000 because all of a sudden you needed like a new used car or you needed to renovate your house or something like that, right? So now your growth is based on 70,000, not 100,000, right?
Right.
But in a dividend paying whole life insurance contract, that is not the case.
Hmm.
Okay. It's growing as if you still had the 100K in there, even though you took 30 out.
Wow. Okay.
Okay. So this is where learning about the ins and outs of how this works is meaningful and worth it.
Yes, it's definitely piquing my interest. I might actually finish reading the book. I
Do
haven't
it, girl.
started,
Do it.
but I have it on my Kindle. Oh my goodness. Now you co-wrote a book, specifically the infinite banking system, with regards to farmers and yeah. So why was that? Why did you focus on farmers?
Okay, so this book is I'm a Canadian co-author for that. So who originally wrote this book was Mary Jo Ehrman, who wrote Farm Without the Bank, the US version. Okay, and she wrote that book specifically for farmers and ranchers because she grew up on a farm, but her and I both mentored under R. Nelson Nash. Okay. And she has no interest in being licensed in Canada. So because her and I met year over year at the annual Infinite Banking think tank, she could see that I was very committed to sharing the same message as her. So she needed to refer her Canadian clients to somebody who was full time, who understood the infinite banking concept. And so therefore, she just ended up throwing me so many different leads. Like now it's just like the majority of my client base are farmers and ranchers, right? And even though I didn't grow up as a farmer and rancher, it doesn't, it doesn't really quite matter because the concept is still the concept, right? However, my appreciation for the agricultural community has 100 times just so much more appreciation. We just take it so much for granted. And in fact, I just really feel that we do need to keep the farmers and the ranchers in private hands
Yes.
more and more. We
Yes,
just need
please.
to, right? And it's been so hard for them because you know
Mm.
what? This also comes down to cash flow management,
Yes.
basic cash flow management, right? If you don't look after your money, you don't look after your money. And a lot of farmers and ranchers, no different than regular people in this, in the city, if you're not looking after your money, you're going to lose what you have, right?
Yeah. Well, you know what? There was
Mhm.
a local, my husband knows who I'm talking about, who one day I was like, where is he? I'm looking at the farmer's market and going, this guy had this humongous booth with tons of vegetables and like 5 crew members, right? They were to be found next week. He's not there. Finally, I asked one of the other farmers, I'm like, do you know where so and so is? Like, I haven't seen him. Like, I want to support you all, you know? He says, he's out of business. And I was devastated.
Mhm. Yeah, I mean, without really know, I mean, there's a story behind all of that. What I can share is the farmers and farmers and ranchers have also had centuries of a relationship with the banks.
Mm,
And they too often have to answer and are enslaved to enslaved
yeah.
to the bank. And depending, like, this is why I have so much more respect for them because they have even more uncontrollable situations that can happen to them, like whether it's the weather, right?
Right.
What's who's in power, if someone's
Yeah.
protesting on the goddamn train track, like that can even impact farmers and ranchers too, right? So they have a lot of things that can hit them left, right, and center, and
Mm,
sometimes the perfect storm can really, yeah, take, a farmer and rancher who's been at it for generations just out of the game and no
yeah.
one to take over because either their children have been watching them just struggle, you
Yep.
know, and don't want anything to do with it. So yeah, I'm doing my best to also just give them back the power as well because I we need our farmers and ranchers. Totally.
Absolutely. I love that. I love that. And I know when we go visit in Canada and my parents live in Markham and sometimes we go a little bit north and skip the highways and things like that. In the past, it was just farm after farm after farm, you know. Dundas used to be, just farm after farm after farm. I remember, just stopping off the side of the road and getting like 12 ears of corn for $1. And it was really good. And now it's condo after condo after townhouse after matchbox house. I'm like, I could tell that was a farm. Like you can tell as they start to build, like it was a farm. Like you still
Hmm.
see the farmhouse, it hasn't been broken down yet, right? And I'm like, oh my
Yeah.
gosh, what's going to happen with all these farms gone? Like, who's going to be in charge of our food if we're not personally growing, which we're working on it? That's kind of scary to me.
Yeah, so it all starts with it's hard to take down. We can't take down the government. We can't take down the banks. So why bother going blue in the face? What I love about the infinite banking concept is that it is one of the most peaceful ways to protest by just simply going around them. Do something like, you know what? Hey, just stop doing business with the banks. And the best way
Yeah.
to do that is get yourself into a position where you can own all your own debt. And it does, the sooner you learn about it, the sooner you can implement it because it is not an overnight process, right?
Mm,
But the sooner you start and you have a good coach working with you, time goes by fast. Just,
mm,
it's very this is not for everyone. Not like everyone has their own filters, their own life experience. There may be certain things that may stop, but I will tell you that most often than not, my two biggest responses, once people really start to learn about the infinite banking concept, is that it's like, why isn't this taught in the schools? And like, I wish I would have started this sooner. And why didn't my parents do this for me? And like, all this, it's all this anger that usually comes at
Oh
first.
yeah.
Um, but it's a peaceful, it's honestly a very peaceful way to protest against the banks and get yourself into a position where you can experience a lot more financial control in your life. And that is getting rid of the need to borrow money from the bank. And it's way more empowering. Like who loves to borrow money from the bank?
Yeah, right. I get these every day, like Discover and Chase, and like they waste so much paper, mailing me with all these offers for loans. And the more money I make, the more they want me to borrow money from them. It's the
Oh yeah.
strangest thing. Yeah.
Well, I
Well, I
mean,
got a lot of kindling for the
they're
fire.
successful business for a reason.
Okay, so we'll say somebody like myself, say I said have okay, I have this lump sum of money and I want to start this process, and now I'm starting like at almost 60 years old, so maybe older than others, perhaps. So
Mhm.
how does one get started?
Okay. So how one gets started first and is this: read this book. Read
Okay.
it. It's 91 freaking pages. It's the best financial education you will get. And in this, like, just get it. Just get it.
Okay, just do
Honestly.
it.
And you can do it. Yes, there is audiobook, the audible version, but honestly, it's better to get the paper version,
Okay.
and do it at the same time. Like listen to it
Oh,
audibly and read it at the same time. There's lots of things to reference to in here. I promise
mm,
it's really good. It's a really good book. Um,
okay.
and I would get it from the because you're down in the States. I guess I put the links down for the, like, I gave you and provided to you for my Canadians.
Right.
But I'll provide you another link for the Americans
Okay, I thought we had
for you
both
guys.
here.
Oh yeah,
Let's
Mary
see.
Jo. Yes,
Yeah,
yes,
that
yes.
Mary Jo's book with the Canadian one, I have it up here. And
Yeah.
but the Nelson Nash book, there's you guys don't sell that, right?
No, I do here in Canada. So
Oh,
the two links I provided, I apologize, I forgot. The one for the Canadians, I offer both books or the singular book by itself. And the other link that I provided to you for Mary Jo, she sells both books as well.
oh, she does. Okay, okay,
Yes,
okay.
she
Great,
does.
great, great.
Yeah,
Okay, yeah, I
she
was
does.
unclear on that. So, okay,
My apologies.
cool,
Yeah.
cool. Yeah. So, I think if somebody just came in, I'm just going to go ahead and copy it again to paste it because you can't see the chat and the live um, unless you were there at the beginning. So let me just do that. There we go. Copy, paste. There we go. Okay. So, and it's going to be in the show notes below, guys, if you're watching this on the radio show. Um, okay. So, step one is read the
Oh, right.
91
Get the
pages.
book. Right. Thank you. I was like, I
Okay.
knew I
Putting it
was
in my
answering a
cart.
question somewhere, and I think I just didn't even finish that thought. Um, so number one is get this book. Please read it because this is more about mindset than it is about the dividend paying whole life insurance contract. Okay.
Oh,
Because it doesn't matter, like, the mindset is more important, because it's just kind of like this. As an example, if you and I both, okay, let's say we both love the Toyota Tacoma truck, okay? Let's just say, even though you might not, but that's like one of my favorite vehicles, okay? So let's just say we both drove it off the lot, same color, same kilometers, made from the same factory, okay? Same vehicle. And but we both drove it off the lot, and we made a pact. We're going to come back in a year and see what kind of condition our vehicles were in. Okay? So year later, it may be, I'll just say, like, I'm a little bit OCD. Maybe I took it in every 5,000 kilometers to get an oil change. I wash it every time. Well, and plus, I live in the Canadian North, right? So they throw salt and shit on the road. So I have to like wash that shit off all the time, right? And you
Yeah.
live in California, I think, right? So it's like
No, but we
somewhere.
have a lot of salt too, but we'll pretend.
Okay, so let's just say you did it at like, instead of every 5,000 kilometers, you did it at 7. I'm just saying, and I'm like really nitpicky too. Like I'll dust my car off every single
Okay.
time I
Yeah,
get in.
you kind of peg me, so I lose track of mileage.
So anyways, I'm just saying that it's
Yeah.
it's our mind, right? It's how we
Yeah.
treat our vehicle that
Yeah.
matters more than the actual vehicle itself. We could have the same vehicle, but it could be, it could be in a different condition, right?
Mhm.
So you and I could both have a dividend paying whole life insurance contract. But if I manage mine more than yours, you know what I'm saying? It's like,
Okay. Well, when you said the word manage, some
right.
of us that roll our eyes when we think about money, how much work is that?
Well, um, if you don't use it, you lose it. This is not a set it and forget it. This is where some people may not do this, because if they really can't see themselves managing this, then it may not be for you, right? You still have to manage it. It's no different. I mean, you have to manage your bank account to some degree, right? You have to use it. You have to take money out and use it. So it's kind of the same thing. There is some interaction with the dividend paying whole life insurance contract to do all the things if you're going to be a banker. So if you gotta, no different if you can make an annual payment or you can make a monthly payment to your dividend paying whole life insurance contract. When it comes time for you to take money out, depending on the life insurance company, they all have different processes. It could just be like a button from the from their online platform,
Hmm.
like a bank. And some life insurance companies may request like a one-page request that you have to sign off on each time, right?
Hmm.
And then money is deposited into your account, right? But then when you go to repay yourself, it's like making an online bill payment to
Okay.
yourself,
Well, that sounds easy
right?
enough.
Right. But you have to automate it. No different than if the bank lent money to you, they're going to automate your payment to them,
Yes.
right? But this
Yes.
is different because you have to automate repayment to them or make manual payments. You get the choice, right? You get the choice of when you get to pay them back. So this is where some management and self-discipline must come in, because you have to respect your money as much as the bank respects their money.
Mm. But say somebody says, well, I really want to be able to take out a certain amount of money to build a school or a health clinic or something like that. Like, how long will it take them to put towards this whole life before they can take any money out?
Dollars in, dollars out, pennies in, pennies out, So like it just really depends on how much you're putting in and when you're desiring to do it. But they don't, insurance companies can't lend you out that's not in there, right? So like the banks, this is where the banks, they lend you money that you don't have, right? So, and this is a part of the problem of our current fight, like our current banking system, which is why cryptocurrency was even born in the first place. But that's a whole other can of worms, so to speak. um, so I would say, like, the reason why the infinite banking concept is also a part of the solution is because it does not participate in fiat currency. It does not make up money out of thin air, right? So that's why
Mm.
it's so much more powerful, and so much like why there's also much more guarantees than that of a bank. right? And your money is actually, if you had to choose between storing the majority of your money inside of a banking institution versus storing most of your money inside of cash values in your life policy, again, if you knew what I knew in terms of contractual terms and agreements, it's actually safer to store your money inside of an insurance contract.
Wow. Yeah, that I believe. So if somebody said, okay, so Winnie, I got $50,000, I don't need right now, and I want to start a whole life insurance.
Oh,
If I got understood you correctly, if I put all that into the whole life contract, at some point in the future, I could be my own banker and take some of that out. Is that right?
yes. Yeah. And you would also have to, the next step after reading this book and then finding out about it is you meet up with someone like a Mary Jo down in the States or someone like me here in Canada. And then we also, because with a life insurance contract, you have to also qualify
Mm.
medically, right? Or
Oh,
at
oh,
least
right.
have a physical body that you can insure, right? Um, it sounds bad, but what I mean is, like, okay, so for those of you who may or may not have ever like owned a personally owned life insurance contract, so the business model of the life insurance company is that um it's their risk management, right? They have to know that if they're going to insure you and they have to owe your beneficiaries money when you die, that
Hmm.
they're going to that you're not going to die anytime soon, basically, right?
Right.
So this is why they ask you questions based on like, what's your lifestyle? Do you speed a lot? Are you a base jumper? Are you in a lot of hazardous activities? What is your health like? You know what I mean? So you're either rated standard or you're declined, right? So
Um,
even if you had $50,000 and you wanted to do this, but you took on major risk and your health was not good, you couldn't have a policy on yourself, right? So then you would
okay.
have to look to your husband or maybe insure your kids or a business partner or your parents.
Mm, right.
Mhm.
Oh, I see. I see. Okay. Okay. Maybe I gotta tell them I figure skate, huh?
No, figure skating is fine.
Okay. Well, I
Maybe
don't do pairs any longer, so I think we're a little safer there. Nobody, very
you
few people die at figure skating. Um, Okay, that's really cool. So I'd love to open it up for some questions. We have some
sure.
questions and comments for some of our live participants. So if you're live with us with Winnie and myself today, and you want to ask a question, you can either raise your hand virtually or write it in the chat. I'll read off some of the comments in the chat. Or if I see your camera on, you can wave hysterically at me, and I can unmute you. I put the links in the chat as well for how to connect with Winnie and Mary Jo in the States here. So you can get a hold of her. And then, some of the other projects that Winnie's talking about that she's pretty passionate about. And I know you have a daughter, right, Winnie, that you're wanting to teach some of these financial principles so she doesn't have to go through all this crazy debt and stress money. You want to mention that while I'm looking at the chat?
Sure. So my daughter is now 25, so I'm continuously pouring into her, and one of my legacy projects right now is that her and I, we as a mother-daughter duo, we coach parents um who have children between the ages of 3 and 13,
Hmm.
um, or preferably before they get really super hormonal. Um, we coach the parents to coach their kids on cash flow management because
Okay.
that's really where it starts. It's like that's really where we can, really catch it at the root of
Hmm.
at the very root, right? And so I started coaching my daughter at age 4, even though I was still very much in the process of learning how to be great with cash. And I didn't actually know how it would really turn out with her until she was already out on her own for like 3, 4 years, where I really truly like she was just working minimum wage jobs because my daughter is not a post-secondary girl. She was a housekeeper, then she was serving. But I mean, I think like with any parent, you just want to know that your children can stand on their own 2 feet,
Yeah.
right? And she was able to do that and more. And so all the cash flow management that I taught her really, like, just became really apparent to us that we need to share this with other parents. So
Because she was doing so well.
yeah, totally. And it was just the fact that she just has it contributes very much to her confidence.
Mhm.
And she never had to stay in a job she felt was toxic. She doesn't have to stay in a unhealthy relationship, um because she
I
knows how to
love
take
it.
care of herself, right?
That's so heartwarming. Yes, thank you so much. That's wonderful. Now, Leslie here says that her question is, how does whole life versus investments differ when it comes to capital gains? And she says, I have whole life, FYI.
Oh, okay. Hi, Leslie. So as it relates to, because you're basically asking a question about taxation, right? And so first of all, uh, life insurance contracts by nature are tax tax exempt, um, especially when it's term. But when it comes to life insurance with a cash value, then it's tax advantaged, and it's not subject to capital gains at all because it's not an investment. So capital gains only
Hmm.
is applicable to investments, and since dividend paying whole life insurance is not considered an investment under the eyes of law, it is not it's not subject to any capital gains. However, taxation, you know what, over a period of time, depending on how your contract is set up, at some point, if you're um, if you're decided, okay, uh, later on, it's 20 or 30 years later, and you decide to take out some cash values, can the life company say, okay, if you don't put a certain amount of money back by December 31st, you'll get a T5. Is that possible once the policy is aged in cash values? And the answer is yes, it can. So there can be some taxation during life if you decide to access your cash values as a policy loan or even as a withdrawal, but it's really like on a case by case basis.
Hmm.
Um, and is there a way to circumvent it? For taxation in a dividend paying whole life insurance contract, the answer is also yes. Yeah.
Okay. Okay, that's interesting. Now, if the insurance company saw that, you had borrowed X amount from yourself and you were making regular payments, would they still T5 a person?
Can you ask the question again?
Oh, yeah, like if you're paying back yourself through this, like, I know it's case by case basis, but would the insurance company say, "Oh, you're already making payments back to yourself or back to this policy, so we don't have to give you a T5 to tax you?"
It just depends on when that the policy loan repayments are occurring. So, like, say
Okay.
for example, uh, let's say Leslie, you you took out $100,000, and the life company says, okay, contractually speaking, you want 100,000, no problem, because that's your money. You get to take it out. Just know that if you don't pay back $20,000 by December 31st, we're going to T5 you for $20,000, right? The following year, if you don't do it by December 31st, right? But if you pay back that 20,000, like that 20,000 before December 31st, they're not going to give you the T5. But if you pay $20,000 after December 31st and you still get T5, you can still pay back that $20,000, and then you'll have to get your accountant to sort of uh, go back and just like rescind the T5. Like it,
Oh,
it can
wow.
come back. Like you can, I don't know how, I don't know. I'm lost for words, but it
Okay.
can be reversed is what I'm attempting to say.
Oh, well, that's very interesting. We have a question here from Liz.
Judy.
How much do you, I
Oh,
think you might have
Louisa.
answered it already, but how much do you have to pay at the start, either in full or monthly, and how much can you take out to get a loan for the right or for right at the beginning? I'm not sure what that.
Um,
How much can
okay.
you take out or get a loan for right at the beginning. I think what you said was it's what you can, pennies for pennies, right? Dollars for dollars. So if you don't have zero, if you didn't put anything in, you can't take anything out.
Yeah, so it again, this really depends on I hate saying it depends, but it does depend. Like depends on how old you are, how much you're putting in, um, like, and so what are you like what are you wanting to get out of it? So let's say if a person wants to get out $25,000 in the first year, um, well, you have to put in more than $25,000 in the first year in order to take out $25,000 in the first year, if that makes any sense. Because again, this this style of a contract does not make up money out of thin air, so it can't give you what is not there, right? But
Okay.
because it has, again, when you start to understand the mechanics of the contract, the more time that your money sits in there, it's capitalizing, and because of uninterrupted compound growth, it gets to the point where, you know, your cash value growth in 1 year exceeds what you put in 1 year. It gets to the point where you can access every single
Ah,
penny that you're putting in. It gets to the point where you can access more than what you're putting in. It gets to the point where your dividend could, if you needed it to, your dividend could, um, like pay your premium if you wanted it to. Not that you it's a possibility and it's your right to do it, but you wouldn't want to do that because your dividend actually technically gets reinvested back into the policy to um
the
sort of
dividend is like an interest.
no, the dividend is actually considered a return of capital, which uh you don't get taxed on. You don't even have to
Oh,
report
oh,
it
oh. I see.
to
I see.
you don't
Oh,
even have to report it. Um
okay. Okay. I know
yeah,
we're running short on time here, but a lot of questions. I don't know if you can stay a few more minutes, Winnie.
sure. Yeah,
Okay,
let's say.
great. Thank you.
And plus, Judy,
I'll
I
get
want to
back
answer
to,
Judy's question too, because she's been showing her, well, she's the only
yeah.
face that I've been able to
Yeah,
see.
Judy, let's go to you next and then Warren and then back to Leslie.
Oh, yeah.
Okay, so I, you know, I'm embarrassed because I am a 60-year-old woman and I'm divorced for a year. And in my 35 years with my husband, he controlled the money, which was okay with me because that's just how it was. And I did my stuff. So now it's a year and I literally forgot all about our life insurance. I have not gotten a bill for my part. Could he have, is it legal for him to take it all? If my
So,
name and his
it,
name,
well, now, I guess if you don't know, you just don't know. But, you know, like, I don't know what it's like are you a Canadian or are you an American?
American.
So, not sure about for Americans, but I know here in Canada, any married couple or even common law, they have to, like when they're thinking about getting divorced, they have to get a separation agreement in place before
Right.
anything. And in the separation agreement, you have to list all your assets, right? And
Same here.
typically, okay, so typically I would say that life insurance would have come up under like revealing like what are all the different um like financial elements, right?
Yes.
So if your husband was um
Mhm.
if your husband was owned the life insurance contract and you didn't understand what that really meant, could he have taken it over and the mailing address is now to him and he's still paying for it, and then upon your death he gets a death benefit? If he owns it, yes, he can do that. Mhm.
Could I do anything about that?
You can contest the separation agreement.
Okay.
Mm. Now the thing
Are
is
you
the insurance company is paying him, not Judy, when she dies, right? Because he took out a policy on her potentially.
He
yeah,
did.
so yeah, so are you do you feel like you're still insurable, Judy?
Yes.
Okay. Well,
Meaning like physically fit and
Like, yeah, like, and you're not
Yes.
like jumping off buildings or doing anything crazy like that.
No.
Well, she might fly from time to time, but we won't tell anybody.
Astral. Yes,
Right,
but
right.
yeah. I mean, like,
Yeah.
putting my broiler on is
Mhm.
probably the
Well,
riskiest thing I do all day.
yeah. Well, first I would say that I would say that, you know, I don't need like who knows what kind of life insurance contract. Maybe it's just a term policy, right?
Yeah.
And
Yeah.
if it's a term policy, I mean, I think you have the right to ask, but if it's a cash value life policy,
Mm,
there may be definitely some funds in there for sure.
mm, yeah.
But if you don't want to open that back up and you just like to just carry on, then just start a new policy.
All right.
Okay.
Okay. Thank you.
You know?
Thanks so much.
Sure.
Because before I even spend a ton of money on a lawyer I'm going to look at my divorce stipulation again, and I'm going to call up the insurance company, talk to them about it. But just wanted to get your
Yeah.
feedback. Thanks so
Well,
much.
if yeah, no problem. But if he owns the contract, they might not say anything. But it would be interesting if you owned it, but he was paying for, I don't know. Yeah, check, I guess.
Yeah. And
Yeah.
we're not talking. So
Oh,
it's not even like I could call him and say, look, remember? Da, da, da,
right.
da. It's not like that.
Yeah.
Yeah.
So,
Yeah.
Yeah.
It just shows that how we have to be so self-responsible, you know?
oh my gosh,
Like
yes.
I could care less for a lot of stuff, money wise, Judy, us healers, right? It's like, let
Yeah,
us do our
yeah.
healing work and just like
Right.
leave us to whatever. And then just having to be this self-responsible. I realize as part of the journey for us healers,
Mm.
and it's
Absolutely.
challenging and we'd much rather face demons, right? But like actual demons than deal with our money. But this is part of that personal, internal, and spiritual growth that we do need to be responsible for, so we can have a holistic living. Because like, and I am a fan of Dave Ramsey, although I didn't follow his system because I'm me. But anyway, he's like,
I love
look,
him.
guys, yeah, if the bad people have all the money, they know how to manage it, and the good people don't, what does that tell you? like come on, like we need to be responsible as the good people, because
Yeah.
if we don't understand, if we don't know what to do with it, then the bad people win. He didn't say it like that, but you know, it
Yeah.
really like whoo hit me when he said something like that. Yeah.
Mm.
So thank you,
Yeah.
Judy. I did
Thank
want to
you.
go to Warren. I'm 72. Is it realistic to get involved with the whole life contract at this age?
You know, it depends on your short-term and long-term goals. And I mean, when you're banking at the bank, they don't care how old you are. They'll take your money. So it just really depends on, is it worth it? You're asking someone really, really biased, but yeah. So my answer is going to be yes. Um, because there's just really great things. Like if you really care about your money and making it last, and I mean, if you're in this community, I mean, 72 could be young, you
Yeah,
know,
right.
like my grandma lived to 101, and I'm hearing all the time now. It's like people are like endeavoring to live until 120. Dan Sullivan, a strategic coach, is endeavoring to live to 154. So if you got a huge purpose and a lot to live for, get going. But yeah, there's not much time left in terms of a life insurance contract that you can get on yourself anyway. But you have all the time in the world if you have like a huge family and you have a ton of insurable interest. Yeah, okay. I think it is. I do believe that it is a much better way to be super intentional and just protect what you have, with a lot more guarantees than like leaving all your money at the bank and putting investments. So yes,
Okay, cool. Thank you.
biasly.
Thank you. Thank you. So Leslie says I put in money every month. My whole life plan. She hasn't touched it for the last 12 years. You said it's not a set it and forget it thing. Does it mean I cannot make a policy withdrawal because I have just let it be? and haven't used it?
Um, now if you have like, Leslie, who's your life company with?
Sun Life.
Yeah, it's 12 years old. You should definitely be able to make a policy loan. I'm
Okay.
very certain.
Okay. Yeah, I heard you say like you can't just set it and forget it. I'm like, oh, that was exactly what I did. I set it and forget it. It's like it
Well,
will be my backup if I need something.
well, it's also like a really great way. Like, so right now, if you had, um, if you had a long-standing line of credit, or if you have an outstanding debt to yourself, I mean, it would also be a really great way to take over your own debt on your terms, because the interest rate of Sun Life versus, like, I don't know. I guess I don't know enough about your situation to really make that recommendation, but it is there for you.
Yeah, thanks. Yeah, I'm pretty close to being debt free, but I'm building a house and like I might be a little bit short. So I was like, oh, I could use my whole life insurance
Yeah,
plan.
yeah, for renovations, for sure, 100%.
Yeah.
Mm,
Can't be declined.
that's
Cool.
super cool. Yeah, that's super cool. And you know, Leslie also asked about you said that the monetary dollar is not fiat, in this whole life. Neither is gold or silver. So she doesn't understand how the whole life is not fiat, because money goes up and down, and the stock the interest rates go up and down. Like, it's like, what does that mean?
Um, so with life insurance companies, they are under contract law and they're
Oh,
not under banking laws, right?
oh,
So say for instance, okay, like like the day that anyone got approved for a life insurance contract and the very first payment they made, right? Like say for instance, like Judy, like who knows? Like maybe when you got the life insurance contract, um, let's just say he got term. Let's just cut out the whole cash value thing, right? And let's say he put $250,000 of death benefit on you. And depending on when he put it in place, maybe it costs like $50 a month, right? And you went through all the medical, like you answered all the medical questions, and the life insurance companies came back and said, okay, Judy is approved based on all the ways that she answered her questions and all that. And maybe they sent over a nurse to collect your blood and urine, right? Even. And the underwriting company of the life insurance company's underwriting department says, okay, yes, we will put a life insurance contract on Judy, right? And since her husband owned it, he paid the $50. Okay. Let's say 6 months later, an unfortunate thing happened, and Judy, let's just say you graduated, right? And graduated to heaven, right? And now all that was paid was $50 times 6 payments, right? Which is $300, right? $300 that was given to the life company equates to $250,000 in a tax-free death benefit. Okay. Now tell me, like, this poses a really good question, but life insurance companies have a lot of compliance. Okay. And before a life insurance company can even offer this contract, they have to have at least 1.5 times, if not more, maybe sometimes 2 times more already sitting in the bank account before they can even offer the contract. Again, life insurance companies cannot make up this money out of thin air. They already have to have the money by law sitting in their coffers, waiting to pay your death benefit out. So actually, the longer that a person lives, this is why they ask so many questions, that it reduces the risk to the life insurance company, right? Because
right.
they can at
Because they're gonna
least,
live longer, and yeah, they can keep
right,
their money longer.
that's right. And to make it work. So
Yeah.
yeah. So I would just say that the reason why it's not fiat is because it just falls under very different rules and regulations than that of the marketplace, right?
Okay, but
It's
then
under
the insurance
contract law.
company saves their money in a fiat bank account. No?
Sure, they have to register with the fee. Like we're all registered. It's a matrix of our world. But life insurance companies also have so much more power than the banks do in actuality. Like if you were to look up, um, if you were to look up in actuality, the banks, what they're backed up by is BOLI, B is in bank, OLI, so bank owned life insurance. Okay,
Oh,
so banks are backed up by bank owned life insurance as well. So they life banks know what they're doing. They know all about life insurance, and they use it as a
wow.
strategic way to, yeah. So
Okay. Well, just to clarify this one point in the term insurance example that you did for Judy, husband's only paid $300 over 6 months. He gets the whole kit and caboodle of this term insurance. But when we're talking about the infinite banking concept, we cannot, borrow the whole kit and caboodle until we've put that much in while we are
mhm.
alive.
Yeah, so this has to be like another session, because what we're all getting into now is a very visual process, because you need to see the numbers in action to understand where this all goes and how this works. It's just the nature of this. And uh, the infinite banking concept is like it's tough to explain in like 3 minutes. It literally conjures so many questions and makes you question everything you know about money,
Yeah.
period, not just about life insurance. And so it is worthy, again, if once you start reading the book first, you'll be able
Yes.
to ask uh ask really good questions after that, right? Like, and then I'd be happy to come back on to kind
Oh,
of give an
that's so
example,
nice. Yeah.
like walking through numbers. That's a little bit better, because that's really what it comes down to. Like, it is a visual process. I'm not joking.
Okay, and I'm a very visual learner, so that makes sense. Thank you very generously for for your generosity and coming back. So we all have home play, guys, right? I'm going to read this book first, and maybe we'll air this episode. Other people can have a chance to read the book first, right? And then we'll have you come back and give us some more visual examples of that. So Winnie, thank you so much for spending your time with us today. And I know I'm
You're
hearing this for
welcome.
the second time, but it's just more ahas, or remembering more of it. So super helpful and very exciting, actually.
Yes. Well, thank you again for the invite. It means a lot. And Judy, thank you so much for just sharing of yourself. And I wish you all the best. Be gentle on yourself. You don't know what you don't know. So, and it it can only get better from here. So just keep at it. Just keep
Oh,
at it.
yeah. Thank you. Thank you so much, everyone. I'm getting a lot of thanks here in the chat, Winnie. So thank you for your time. Thank you for all of our live special guest participants for today's Light Warrior Radio. Looking forward to the next time we can get together on Light Warrior Radio. Much love and all the best. And below in the show notes, you'll see Winnie's contact information and the links to purchase the books, whether you're in Canada or the US. And also, if you like the show, give it a thumbs up and remember to subscribe to my channel. Until next time, much love. Bye bye.